You're watching the Lunchtime News with me, James Chow. 60 minutes of all the latest in your world today. Let's begin in Beijing, where the Chinese government has cut domestic fuel prices starting Friday. It's the first reduction in almost 2 years. The price cuts are 900 and 1100 yuan per ton for gasoline and diesel. The National Development and Reform Commission says the cuts in state-set fuel prices reflects lower global oil prices, which fell to a 4.5-year low earlier in the week. Well, the move to cut fuel prices is in addition to the country's new plan on fuel taxes and pricing reforms. The State Council confirmed Thursday that it would take effect on January 1st next year. The country will cancel 6 types of fees on road maintenance and management. The gasoline consumption tax will rise from the current 0.2 yuan to 1 yuan per litre. Meanwhile, the diesel consumption tax will go up from 1.1 yuan to 0.8 yuan per litre. Now, the government's decision to cut fuel prices has delighted consumers at home, but as Deng Wei tells us, they still hope that domestic oil prices will move in line with global markets.
In Beijing, the government's price adjustments have slashed the number 93 gasoline price from 6.37 yuan to 5.46 yuan. Both car owners and taxi drivers are satisfied with the price cut.
The price cut is so good fast.
It will save me more than 200 yuan for driving 50 kilometers.
But consumers are still hoping for a further cut to push domestic oil prices closer to the current global oil prices.
I hope domestic oil prices can stand in line with global markets. This will help ease our burden.
China's oil prices have surged rapidly over the recent years and has remained unchanged since a shock 18% hike in June. Many consumers also say they hope domestic oil prices will move more regularly in line with global markets. Deng Wei, CCTV.
Well, let's stay with business and look at the picture elsewhere. Over in the US, crude oil has plummeted to a 4-year low, near $36 a barrel. When trading closed on Thursday, prices had fallen by 9%. That's despite dramatic cuts in oil supplies by OPEC, as well as in US interest rates earlier this week. Lingering concerns on falling global demand have pushed oil prices to their lowest since 2004. They've now dropped 25% over 5 trading sessions. It's hurting energy stocks both in the US and in Europe, helping to push down the broader US market by a margin of 2%. Meanwhile, longer-dated US government bond yields fell to fresh 50-year lows as investors rushed to safety. But the US dollar rebounded from steep declines seen earlier this week, rising against a basket of major currencies. Against the yen, the dollar rose a little over 2.7% to end at 89.7 on Thursday. The euro fell by 0.77% against the American dollar.